investor aspires to follow in the footsteps of U.S. billionaire Warren Buffett, who became self-made at the age of 11 and is now valued at over $117 billion, according to Bloomberg. Mr. Buffett is the fifth richest person on the planet and the most well-known investor in the world, but he is admired for more than just his wealth. The Motley Fool, a provider of financial services, estimates that if you had invested $10,000 in the business in 1964, you would currently be worth more than $240 million. Despite having a head start, Mr. Buffett only reached 99% of his wealth by the time he was 50 years old. Next, the following gems may boost your wealth and enable you to make significant financial savings. Have you ever learned to make passive income? Warren once said, "If you don't find a way to make money while you sleep, you will work until you die." I love that. The average millionaire is said to have 7 sources of income. In order to diversify your income and increase it, you need to create passive income streams because you can't always trade your time for money. Here are 3 simple methods for earning passive income. Buying dividend-paying stocks. Create a print or digital book to earn ongoing royalties. Make and market an online course about a subject you are knowledgeable about, for example, photography, sports, woodworking, and many more. What is an S&P 500 index fund, and how can it be the best investment option? 2 of Buffett's best-known statements about investing are that people frequently overcomplicate the process, and that, for the majority of investors, investing in low-cost index funds is the best option. For starters, if you retire at 65, you might live for 30 years or longer than you anticipated. This suggests that retirees should still have a stock allocation because they will likely have plenty of time to recover from any bear markets. Buffett also firmly believes that an S&P 500 index fund is a better choice because even experienced investors find it difficult to outperform the stock market's long-term returns, particularly when fees are taken into account. When discussing how he wants his estate to be invested after his death, Buffett goes so far as to say, "I just think that the best thing to do is buy 90% in an S&P 500 index fund. This is a great way to avoid paying unnecessary fees in your investment account, which can add up over time and reduce your return even if you don't do anything else." But why did Warren Buffett bet on index funds? And are you familiar with or have you ever invested in an S&P 500 index fund? The wager involved comparing the performance of the S&P 500 to that of a portfolio of 5 hedge funds over an 11-year period beginning January 1, 2008 and ending December 31, 2017. The performance was evaluated after fees, costs, and expenses were deducted. By substituting the Vanguard Index Fund for the S&P 500, Buffett came out on top. During those 10 years, the S&P 500 Index Fund generated a return of 125.8%, while the average return of the 5 funds after fees was only 36.3%. Buffett advised investors to choose low-cost index funds in light of this outcome, highlighting the fact that when a sizable sum of money is managed by high-fee demanding Wall Street professionals, it is typically the managers who benefit, not the clients. As a result, both big and small investors ought to stick with reasonably priced index funds. Don't risk your financial security for family. How can you strike a balance between enjoying your retirement and responsibly providing for your family's future in terms of financial planning? Well, Buffett does not advise you to abandon your family financially, but he does advise you to put yourself first. You won't be able to replenish your funds if you dig yourself into a financial hole in retirement by assisting family members. This does not make you selfish. Rather, it makes you practical. If you still have a sizable retirement account as you near the end of your life, now is the time to consider leaving more money to your heirs. But you should make the most of it while you're still retired. In his book, Tap Dancing to Work, Warren Buffett on Practically Everything, 1966 to 2013, Buffett stated that the perfect amount is enough money so they would feel they could do anything, but not so much that they could do nothing. Are you diversifying your investments? Why does Warren Buffett emphasize the importance of diversifying investments? And how does it contribute to a more resilient and potentially profitable investment portfolio? Are you approaching your investments with a long-term mindset? According to Warren Buffett, if you're not prepared to hold a stock for 10 years, don't even consider holding it for 10 minutes. Emphasizes the value of long-term investing. This quotation highlights a significant investment lesson from Buffett. He doesn't choose stocks based solely on short-term hopes for a quick increase in value. Buffett emphasizes a long-term investment strategy and focuses on buying companies with the intention of holding onto them for a long time. Although he still regularly sells stocks for a variety of reasons, he approaches the majority of his investments with the intention of holding them for the long term. A set-it-and-forget-it investment like an S&P 500 index fund, according to Buffett, is one of the best investments most people can make if they can adopt a forever mindset with their stocks. Do you understand compounding? Possibly the best illustration of the effectiveness of long-term compounding is Warren Buffett. Buffett benefits from the power of compound interest, dividend reinvestment, and the ability to continuously reinvest the operating cash flow produced by Berkshire's businesses. How effective is this? Since Buffett took over in 1964, Berkshire has generated an annualized return of 20.1% on average, versus 10.5% for the S&P 500. This might not sound all that remarkable until you consider that over time, this has led to a total gain for shareholders of 3.64 million%, as opposed to just 30,209% for the S&P 500. And have you found your passion? Finding your passion is something Warren strongly supports. He claimed that at the age of 8, he knew he wanted to be a businessman. He continues to be enthusiastic about what he does every single day, more than 7 decades later. Without passion, you don't have energy, he said. Without energy, nothing exists. Warren, who is 88 years old, continues to work every day out of passion because he enjoys what he does and will continue to do it forever. It doesn't feel like work to him. Warren Buffett was asked in an interview with Fortune magazine how other people can tap dance to work the way he does. As his response, he stated, "You find your passion." Warren Buffett believes that people who find their life's passion are fortunate. He believes that people are fortunate when they discover their passion because people who enjoy what they do end up doing it well. Warren Buffett believes that one of the best ways to achieve success is through passion. Why? Because he recognizes that we live in highly competitive times. In today's competitive society, if you don't enjoy what you do, you will find yourself at a disadvantage in both the labor market and the marketplace. As a result, Warren Buffett advises students fresh out of college to take the job that he/she would take if they were independently wealthy. Passion has a lot of power. That's all for today. Thank you for joining us on this thought-provoking journey through Warren Buffett's investment strategies and life lessons. If you found this information useful, please subscribe to our channel for more motivating content. If you enjoyed this video, please subscribe and press the bell icon. Share this video with people you know who could benefit from Warren Buffett's advice. Please leave a comment below if you'd like to share your thoughts and experiences. Until next time, keep exploring, learning, and finding your own passion for success.